There we go. Clicked it like 3 times to go live. I don't know what the deal was this morning. Welcome, everybody, to the show. Good morning, my monsters of trading. And, what a week it was last week. And you're just waking up hungover from whatever happened last week, like on Friday. Let me first say, welcome to the party, everybody. Seems that the market decided to cram an entire year's worth of volatility into Friday afternoon, at least in the gold and silver markets. And we saw stocks taking a nosedive. We saw dollars suddenly get a jolt of life, and silver. Oh, poor sweet silver. Whew. What a pullback. Kind of had a day that makes you want to crawl back into bed if you were long at the top and pretend that none of this is real. It's kind of the biggest single-day drop for silver since the Hunt brothers tried to corner the market back in 1980. And participants got absolutely steamrolled if you were long. And just to make things interesting, we got the announcement of a new Fed chairman. Plus, Bitcoin decided to take a bath over the weekend. I mean, didn't slow down. So, if you're hoping for a calm, quiet start to the week, sorry. The market has some other plans. Today might be kind of spicy. But that's why we're here, right? To make sense of the madness, or at least try to find some humor while we figure out where to put our money. So grab your caffeine of choice. Let's get into it, shall we? First off, there's an analyst over at Bank of America. I talk about him quite a bit. Michael Hartnett, who's been beating the same drum for a while now. His core message is pretty simple. Something he calls debasement is the base case. Now, debasement sounds fancy, kind of complicated. Financial jargon, right? But really, what it means is that our money, the good old US dollar, it goes down in value. It's being watered down. Think of it like this. You've got a glass of really nice whiskey. You name it, right? Whatever it is, whatever your flavor is, really nice. That's the dollar. Now the government comes along and pours a little water in there. And then comes back by a little more water. And a little more water. And pretty soon, the whiskey doesn't have any kick to it. It doesn't even have any flavor. It kind of tastes like water. It's weak. It's debased. And that's what's been happening to our currency for years. I mean, thanks to massive government spending, the Federal Reserve's money printing going brrr, Jerome Powell trying to save the day. And Hartnett's point is that this isn't an accident. This is a feature, not a bug. A weak dollar makes it easier for the government to pay its mountain of debt. The only real solution, if you've been here for a while, you've heard me say this, the only real solution to $38 trillion of debt is to inflate the debt. I mean, now we're scratching at 39 trillion. Soon it'll be 40 trillion. By the way, it also helps boost manufacturing in the key Rust Belt states. Another plus, right? When we're trying to kickstart the Industrial Revolution again, which is politically convenient. So while politicians might talk a big game about a strong dollar, well, they don't really want that. The actions of the day tell a different story. And this brings us to the shiny gold. For centuries, gold has been the ultimate hedge against currency debasement. I mean, it's the original anti-dollar. Originally, the dollar was pegged to it. And according to Hartnett, the good old gold bull markets of the past, well, history tells us they don't just fizzle out. They don't just go exponential and end one day. They're ended by bigger events. Think about it. The end of the gold standard under Nixon In the 70s, well, that was kind of the end of a gold run. Paul Volcker's massive interest rate hikes in the 80s, the end of the European debt crisis in 2012, the COVID vaccine in 2020. I mean, these are big seismic shifts that kind of knock gold down a little bit. And it takes a seismic shock to knock gold off the pedestal. And that's why Hartnett has been a fan of what he calls the permanent portfolio. It's simple. 25% stocks, 25% bonds, 25% gold, 25% cash. I mean, it's fairly easy. It's a standard designed to weather any storm. And this mix has been absolutely crushing it. The portfolio has had its best year since 1979, back in 2025. We're all the way back in 2025, like last year. So the 10-year return on this is the best it's been since 1992. It's a balanced portfolio. It works right now in the current environment. But if you don't have that, well, maybe not the time to go rearranging. It's been a simple, effective strategy that's worth looking at, maybe getting closer to, especially in times where we have extreme debasement. But there's another twist to the story. And right now, right before Friday's chaos, Hartnett warned that gold and silver were kind of in the nutty overbought territory in his terms. And yeah, I kind of warned that we were due for a pullback. I just didn't know when. We were getting there. And I mean, sometimes the pullbacks are inevitable, right? Silver, which had been on an absolute tear, suddenly fell off a cliff. A 31% drop. Probably get a 38.2 retracement, right? 1 minute you're a silver bug stacking shiny coins to the ceiling, feeling like a king, and next you're looking at it crater your portfolio like you had it full of Bitcoin. I mean, it was a brutal, violent correction, and it just wasn't silver. Gold took a big hit too, dropping $450 in a single day. Even Bitcoin, the new kid on the block, has been down to 75,000 over the weekend. So what caused all this? Well, part of it, I guess, maybe if you want to finger points, was the announcement that Kevin Warsh is set to replace Jerome Powell in May as the new FOMC, Federal Reserve Chairman. The market's reaction was, oh no, an inflation hawk. He's going to raise interest rates to the moon and take away the punch bowl. But then, in typical 2026 fashion, the market did a complete 180 and started pricing in more rate cuts because, of course, it did. Nothing makes sense anymore. It's Choose Your Own Adventure book written by madmen, if you believe that the news actually controls anything. But what we saw Friday was a classic deleveraging event, actually de-risking, getting out of, let's sell everything and reevaluate later. You can point fingers at all sorts of things. There were massive margin requirement increases on gold and silver that causes less people to be able to play. The easy money trades, the ones that have been working for months, long gold, long silver, long crypto, kind of all got blown up. It was painful, but a necessary reset. We got to shake out some money. Money has to flow. So after a day like Friday, the big question is, where do you go from here? Is the party over? Is it a temporary setback? Well, Hartnett had something to add here too. He puts out the Flow Show weekend update kind of thing, and a lot of these kind of ideas come out of those. So I tried to summarize it for you. So if you believe in Hartnett's kind of thesis, the long-term trend of the dollar debasement is still going to go on. The recent chaos might just be a healthy correction before another whole nother leg up. And that means there might be opportunities here. Well, there are opportunities here. First off, let's talk about the permanent portfolio, the 25, 25, 25, 25 split. You know, great starting point. If you want to have a diversified all-weather type of strategy, it's not about hitting home runs. It's just about consistently keeping money going. Now, for some specific ideas from the Hartnett Playbook, long mid-cap stocks. Hartnett is a big fan of mid-sized companies right now, especially those tied to what he calls the MAGA manufacturing renaissance. The idea that a weaker dollar is here and you can take a focus on bringing manufacturing back to the U.S. with your plays. And this will benefit companies that he was looking at. He's looking at the S&P mid-cap 400 and the small-cap 600. These are the companies that actually build stuff, not just write code. While the Renaissance has a bumpy start and we've got a lot of questions how it's actually going to play out, some job losses in manufacturing last year while things shake out, there's still a lot of investment pouring into the sector. And if investment's pouring in, there's opportunity. Next, you have the long international. For years, the U.S. has been the only game in town, but that might be changing. Hartnett suggests looking at international markets, particularly China. I was saying that China might be a big play later this year. Now, I know what you're thinking. China, aren't they like in this giant deflationary spiral, like printing money like you wouldn't believe? And they have been. You're right. But here's the thinking. You kind of want to buy when there's blood in the streets. And right now, it's kind of an underinvested sector. Goldman Sachs is forecasting 20% gains for Chinese stocks this year. Could be more. It's a contrarian type of play, for sure, but could pay off big. So a little bit of asset exposure to that sector as China turns things around, or if it manages to make a bigger impact on turning around, it could play out. Next, long oil with gold and silver looking a bit shaky in the short term. Hartnett suggests that black gold might be a better debasement play right now since it's still not really moved. It's a real asset. It's essential for the global economy, and it tends to do well when the dollar is weak. And then, of course, short the dollar. This has been the core of the whole debasement thesis. If you believe the dollar is going to continue to weaken, you can bet against it. This can be done through currency ETFs. We've talked about quite a few: FXE, FXY, FXB, UUP, and you can invest in assets that benefit from weaker dollar, like emerging markets or natural resources. These are all ideas that you could, take advantage of. I mean, look, nobody says this is going to be easy. There's no like treasure map that's printed that you just need to find. It's full of risk. All right. The markets are wild, unpredictable. And what makes this kind of exciting, I think, is the fact that every day is a little different. We saw that on Friday, and it was a reminder that nothing goes up in a straight line. I mean, there's going to be corrections. There's going to be crashes. There's going to be moments of sheer panic and terror, and potentially, if you're on the right side, pure moments of joy. And I've never seen that much money in one day. But you got to be on the right side of stuff. So be careful out there. If you have a solid framework, you understand the big picture, you can navigate these turbulent waters. The story of the dollar debasement is a powerful one and likely to be the defining theme for years to come. So keep your eyes open, do your research, and don't be afraid to be a little bit contrarian. And that's it for the monologue today. If you took the short Bitcoin trade, mine just closed out. Just saw the alert pop up as the market opened. And all trading involves a substantial risk of loss. Past performance, is not necessarily indicative of future results. I'm just a guy on the internet. I make predictions. Sometimes they come true. I have no crystal ball. I have a bag of unicorn dust sprinkled on the market. But, just because I say things, sometimes I get it right, doesn't mean I'm always going to be right. And this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those things, you might lose money. probably will lose money at some point. If you desire personal financial advice, hire and consult a financial advisor. It's not me. I'm not giving you any advice to do anything except take a vested interest in your own financial well-being. That's what I suggest. Now, jumping into charts, look at what's moving. We'll spend the next little bit doing that, and then we'll come back to the end here and kind of try to read the gamma charts, which are options, positioning for the SPY and QQQ, and kind of see where things might be heading today. We'll take a look. And there's DJT at the 618 retrace. Beautiful. Waiting on that to happen. 1, 2, 3. Could dip a little lower, but that looks pretty spicy right there. Man, bunch of alerts piling up this morning. Bunch of alerts. Bitcoin. I guess the big news, the Bitcoin over the weekend. Right down to the target. Look at that. Look at that. So, crypto winter confirmation. This was a confirmation that we're probably going to be doing crypto winter. Look at that. I got that so darn close. Dang. If you took that short Bitcoin trade that I talked about 2 weeks back, short IBIT, look at that, right? Basically missed the very bottom. This is what I thought would happen, was that we would see Bitcoin dip out over the weekend and start recovering, and you wouldn't be able to get out at the exact bottom. So that was kind of what I thought would happen. That's why I was very cautious, not going for the full Monte, but did a pretty good one, looks like. Did a pretty good one. In case you may miss that play, here's what it was. I got in, bought the 49 put, sold the 45 put. Then just now I got filled at 285. Maybe could have got better, but that's what I got filled at right there. So do the math on that. 285 divided by 0.84. 330%. Not too bad. Nice little play. Now, the opportunity short term, I feel like, is to potentially sell some puts here right in the low 40s, because I expect the next couple of months, I expect this to be a bottom for now, quite honestly. Could be a little choppy, but I expect us to do a 618 retrace of this drop from this high up here to this low right down here. Probably something back up around 60 on IBIT, and skip up to the Bitcoin chart. That'd be something back up around this, all the way at the actual low. So something back up in the 100 to 115 area. And it's going to take a close back up here now to be not crypto winter. So I expect over the next, say, maybe into June, possibly. Could be faster. 3 to 5 months here. Kind of expect us to spend time doing that. And then we'll probably make a lower low than that low right there. That should wrap up by October of this year. So far, so good. And that's what we got cooking. That's what we got cooking. Cooking with diesel fuel. All right. Nice work, anybody that got a little bit there. And yes, downtrend, caution. Longs were under the roadmap line, still got down pressure. Just a little bounce over the weekend here. Bottomed out at 1 a.m. Eastern. Still a downtrend, so I'd be careful taking longs. Still a downtrend on NQ, and still a downtrend on Russell. Oh, look at that. So close to the bottom of the head and shoulders. Still has downside opportunity here on Russell. Got really freaking close. Was that close enough? I don't know. That may have been it on Russell right there. That was pretty darn close. His head and shoulders showed up on, I mean, you can see it on the daily chart. It was really clear kind of on the hourly chart right here. And that was pretty darn close to playing out. So we'll see if that continues or break back higher and come back to the highs. Next upside target on Russell is up here at 3,100. It's the next upside. Bounced off of that 2,700, pulled back, did that little head and shoulders. If that was the bottom, next upside right up in there. Oil, showing a little bit of chaos here. So far, rejected the breakout. Rejected the breakout. Finding supports. If we hold here and bounce back higher, that is a long right there on the break back higher. Break back above that high from last week. That is a long on oil. If we break back below this low right here at 58.86, we're probably coming down to 50. So that's kind of that's the two levels right there. Above here, probably going up to 100. Below here, coming down to 50. Fairly simple right now. And as long as we stay in between, it is slightly up biased because we're above the daily roadmap line. You don't have the roadmap line. You go to the channel homepage. I give the code out for free. Or you can click the link in the description. It's like $5 for an easy button. It's just a support resistance line. Pretty easy. Code's pretty easy. So I give it out for free. It's not like, and $5 is pretty reasonable. Less than a $9 cup of Starbucks, you can get the roadmap line. Works on all time frames. It's a support resistance line. And gold probably coming back down to, wow. Will not surprise me if we do this right there over the next little bit. I've been warning as we poked out of these 3 standard deviation away from the roadmap line. You know, we've been poking out. I've been warning that it's getting a little crazy. Poked out again. It took it. We didn't even touch a 2 standard deviation before we went out another time. And look at that. We couldn't even close out. We just poked out and it came back. Now we've touched the 2 touched the 2 and the 1 standard deviation. Probably going to touch the roadmap line. Probably. Bitcoin. This could be a bottom for a couple months. I would expect this to climb back up in here. Ethereum. Probably a bottom for a little while. That got a little extreme on the downside. Not keen on that. Does make me question whether we can get some upside going here. Bringing that low over here. Let's make this guy smaller. Gonna take a breakout up there. And this is looking like we're in crypto winter for now. Crypto winter, probably going to last through October. Usually lasts 12 months. We topped out on Bitcoin back in October. So that puts us somewhere out here around October 3rd for the low, plus or minus a week or 3. So we're probably going to do this and then do that. We could be down in the 30 to 50K area when we bottom. Could be the low. Could be higher than that, but that would be my target zone on the low. I don't think we're ever going back to 25K, but could be surprised. We could touch that, but I don't think we'll ever see 25K again. I said that a couple of years ago when we broke through it the last time. That was probably the last time we see that for a long time. NKD, global liquidity, just kind of chopping around here. Lower highs, higher lows. Indecisive. If we break down below the uptrend of lows, probably taking a trip down to the roadmap line and fleecing out S&P, NASDAQ, Bitcoin, Ethereum with it. If we break out higher, well, those things have the potential to go higher again. Dollar still continuing to be, to climb here. This could be the bottom. That was the lower low that I've been looking for quite a while. Now, the indicator would be a break back above that low from right back there in December. If we break above that low, the dollar might be done on the downside for now. So that level right there, the 98.5 played out. Like I mentioned that for, gosh, what? November, into December, when we broke down below it, even though we climbed up, I mentioned we were going lower low than we did back in September, and that's exactly what played out. So if you missed all that, let's watch the back episodes. It's all there. It's all in the history. At this point, that all played out. So bingo bango. Now, the problem here, this is only a 3-wave move. It's not usually how we end the final move. So if we can maintain, I thought we would chop in here for a few days. This is pretty fast, so we may see a fast conclusion to this with a lower low than the low we made back there last Tuesday. Something to keep an eye on. But this could wrap it up for a little while. We could, even though dollar debasement and all that might still be the name of the game, we could see a multi-week, multi-month, even a multi-year rally after we make whatever lower low here in the next week, couple weeks to couple months. Could be fast, could be this week. So keep an eye on this. There's potential here. I don't necessarily agree with Hartnett. Apple chopping in here. We can get above the 618 level, upside 295. We stay below that, downside probably down to 209. Amazon still set for the 265 target. Google holding up pretty well. Do have earnings coming up this week. Caution. Amazon also has earnings this week. Caution if you're long. Meta, getting a retrace. We may come back to the roadmap line here. Find support and then break on out. This is set for a rally to, we've set up the pattern. We made the low here. We made the low here. We broke higher here. Target 1100 to 1300 area. And that could take a couple years. Microsoft, right down in the target area. Be best of a hit of 415 happen. Then we can kind of align with Meta. Probably get a move up, a retrace to another 618, and then set this up for a bigger breakout Could be pretty huge. Let's see. We could be talking about a move up in here for Microsoft. If we can get that bounce. Something around the 800 area. Double from where we are now. NVIDIA, stuck. Still stuck. 195 resistance. Roadmap line support coming up, squeezing. Higher lows. If we break down below lows, probably coming down to the 150 area where we made the highs early last year. And if we break out through 195, the upside 220. And Tesla still chopping in here a little bit. Back to the low. So false start on Friday. Not even a penalty, just a restart. Popped, came back. May need to tag that daily roadmap line. Looked like a dip and rip, but nope, right back down. Probably need that one little touch, and then we can get going. Netflix still trying to establish that this is the low at the bottom of this box. I don't trust it. If we get below the box, we're going down to the 60s. Jim Cramer coming out this morning saying that now is the time to get into some Netflix. That's usually not a good sign. So, may take a trip down there. Now I go pull gainers. Things moving up $2 or more, put them on the gainers list. Things moving down $2 or more, put them on the decliners list. And I bring some setups that are set up with my market roadmap bounce pattern. Got 6 of those today. I usually hunt for some opportunities, dig in the charts here, look for things that are potentially turning the corner here. This one did a bounce, came up shy of the target, and came down, made a lower low. So now we have a potential full retrace, A, B, C. You can put it here, you can put it here. The high is basically the same high. This looks like a complete correction. If we can get back above the 619 area, should come on up to 684, 831. Momentum just keeps grinding higher. Momentum. I don't have any wild guesses where this is going to top out. The correction is going to be epic. SMST in the resistance. Watch out for a turn down here. This has got reverse splits. That's dangerous and probably coming right back down at some point. SanDisk keeps being crazy. 800, maybe 1,000 on the upside. Short Bitcoin didn't make it to the target. I warned about that this may come up shy of the targets. Just back to the high. This is ultra short, so it's a leveraged short Bitcoin. Oracle is below the 618 there. This might take us back to the lows around 120. Even though we're bouncing a little bit today, this is a downtrend. Be careful on this. Be careful. We got below that gap, pushing on down. This can take it back to new lows. Not keen on that right there for Oracle. McDonald's. It's got a market roadmap bounce pattern for a 325. I'm actually looking for something a little spicier. On up here around 370. I have my order. I have a few shares and I have a 370 order on that baby. Somebody asked me why would you target something so high? It pays a good dividend. It's a good long-term stock, and I'm just gonna keep chugging on it. 370 is my target, so right up there. It's for the longer-term breakout kind of pattern. And I just grab my alert. That's cool. Yeah. I was targeting 330, but now I'm targeting 370. So. And Palantir, almost to the target. On the downside, let's see, Hood. Oh, man. Jack's gonna be bummed out. Sometimes I get lucky on these predictions. All the way back here in October, I talked about this is going to come down to this area, and we're almost there. Can be complete at any point. It doesn't have to touch in my bubble, but looks best if it does. Same here. This can be complete. We did a lower low, but it'll look best if we tag down in here. 130 area. Autodesk keeps getting pummeled. And it came up shy of the target up there. There's the high, there's the low, there's the high. If this thing dips down, makes a lower low, somewhere down below 232, this can kick off a bigger bullish pattern. Autodesk. Autodesk being CAD software and animation software, I guess probably taking a hit because of Hollywood taking a hit. Twist is in a bit of a downtrend here. If we could break higher than that, yeah, we're gonna have to break out through the uptrend of or downtrend of highs to see an upside of 70 on Twist. Bioscience, that is a biotech company, so be careful on that. Unity, ouch. Yeah, like I said, animation software, game software. It's a game creation software that it's hard to say if that. It looks like 3 up, and if that's only 3 up, we could see this make a lower low. Looks like a 1, 2, 3. To me, that's what that looks like. Oh, yeah. Corrective proportions. This might make a lower low. So if you got long exposure to Unity, this might be heading down to the 11 area. Be careful on that one. MP couldn't get above the 76.80 area to kick off the long. Watch out for our extension lower. This might still be in a correction. We could see it dip back then, basically fill that gap back here. PAL. Getting a little correction, may dip back to the roadmap line and set up the bigger upside here. Palladium, I feel like, is one of the bigger, if we're gonna have like all this industrial upside, this didn't really move like gold and silver and other, copper. This one hasn't really moved much, so this could be a big catch-up type play. Outperformance compared to a lot of the other metals. Looking at some decliners, usually we find bigger opportunities in decliners. That one looks absolutely horrible. Korea getting punched in the face today a little bit. That'll probably resolve and go higher again since SK Hynix is set to rip. Although, news of the weekend. So NVIDIA getting smacked a little bit because news over the weekend is that OpenAI can't afford the GPUs. They're not bringing in revenue, and they're not going to be able to afford to buy the GPUs that they need to buy trillions of dollars of GPUs. So if NVIDIA can't sell to OpenAI, who are they going to sell to? Maybe Anthropic, maybe xAI, maybe who knows? And xAI looking to combine with SpaceX and maybe Tesla and who knows what else there. So it's an interesting dynamic environment right now. And NVIDIA sitting at high valuations. If the GPUs don't move, watch out to the downside. And then MU with giant memory contracts for all of that has risk to the downside. But Samsung and SK Hynix kind of coming in, filling the gap. and where MU decided they're not going to sell to retail anymore. SK Hynix and Samsung stepping in to fill the void. So EWY or KORU are ways to get exposure to these since they're not traded in the US markets. Taking a little step back today. KLAC coming back to the roadmap line. CRS, there's the roadmap line. Can't remember Sugar Honey Iced Tea. We're right back higher. 367 maybe. Metals and materials. ASML, that may be topping out. Be careful. That was the lofty upside target right there. Now this was the first target. This was the lofty target. And this was the really lofty target. And a big correction would not surprise me. We've seen really big corrections on ASML before. Be careful. GLD taking a step back. That trade, the weekly trade just didn't work there. And probably done for now. Lockheed Martin. So bigger picture, this could be setting up for 689, maybe 792. MSTR. Wow, holding up really well. Actually, I expected a dip off, and we're actually holding that bubble. If we can hold this one up to the roadmap line. If we get below that, though, down to this one, it's pretty showing some resilience here. Potential to come up to the roadmap line, back up around the 220 to 240 area in the short term. Then we see what happens. If we can get above it, going up. If we stay below it, might come on down here. Coinbase, that's what I expected to see on MSTR. So Coinbase dipping on off here. Ouch. Couldn't hold on to that. So we've got support down here at this prior low. And then if we're actually in crypto winter, we're probably going to see Coinbase come on down here. That's a 50% haircut from where we are. So that could be painful, especially if you're in Connell. Humana. Dang, look at that. Perfect. Perfect extension. Could come on down to 180. Watch that. We get the bounce here. God, the roadmap line's way up there. It's gonna take a lot of effort to get back up there. UNH, let's check that one real quick. Potential to start building a position here. This thing's holding the 618. If it gets moving, 600 up there. ALB. Back to the roadmap line. STX was taking a step back. Now it's climbing again. Hard drives, hard drives. SMH, watch for that to drop. HX, yeah. Applied materials. Elevated. We still got a lot of fluff in the market. Be careful. We can keep the AI trade rocking and rolling. As I've talked about, we're probably shopping in this zone right here. If we actually break out and take this AI thing higher, we could be up around 40,000. If we do like we did in the dot-com bubble. Now, the downside here is that while we do that on NASDAQ, the S&P could have some volatility here. After this completes, we could see a big, very big downside retrace. And we're chopping right in that, look at that. I mean, that's pretty amazing. We're chopping right in this 25, 26,000 set for a breakout. We could go on a massive rip on NASDAQ. And we're chopping right at this 7,000 right now. Could be right in this. Could take a bigger swing back down. Come up, swing down, come up, swing down, come up, swing down, come up, swing down. So could be in for some choppy stuff on S&P. So far, the comparison between .com era and current is uncanny between these two charts. Pullbacks almost in the same timeline. So just keep aware. This was made back a few months back, and we're probably up in this area now on S&P. We're probably up in this area now on NASDAQ. This was back in the summer when this was made, so we're probably on up in here. Crazy. So be careful. Crazy can keep being crazier. Hood right down near the target. AVAV. Looking for this to hold a higher low, but if it doesn't, could get an extension much lower. First move down, retrace. Second move down, put us down to possibly 188. XOP. Tag the target, so that one's pretty much finished. Finito bendito right there. Shot for the retrace back to 130 supports. VRT. 212 to upside targets. I bet maybe down on the downside for now. We could get a little extension, but be careful there. Reddit. We'll break through this zone. Probably going to take a bigger, deeper retrace. Maybe back down in here. 70 to 80, maybe 100 area. Sats due for a retrace. Bit B keeps getting punched in the face. And hood. CLP. That hit upside target. Be careful. That can retrace again. Especially if oil starts being a little soft. Baidu. This is the China move right here. Baidu getting ready to move. Baba. Upside target 200. Yen hasn't really moved yet. KWeb still consolidating. CWeb still consolidating. Ego, watch for this to come back to the roadmap line. STRD. Sheesh, STRC. Yeah, this is holding up really well. If you believe this is going to come back up to the 100 pin, pays a really healthy dividend. It's a way to play strategy. Their stablecoin current stock pays like a 13.7% dividend here. It'll probably come back up to 100. As long as it's below 100, they'll raise the dividend, and when it gets above 100, they cut the dividend. So far, increases across there. CIEN, probably come back to the roadmap line. CRDO. Oof. Can't seem to find a bottom here. EQT. That kicked off the long 64 target. KTOS. Probably coming back to the roadmap line. VDE. Yeah, that's starting to look a little played out now. Hit the target. We could retrace to the breakout and then push on up to 148. UCO, like I said, if we can break above on the oil chart, UCO would be set for a pop. Otherwise, we might go lower low here on oil. BLO, Watch for the retrace of the roadmap line. Disney. Support down at 94. Valaris. 64 upside. VIST. Targets, watch for the retrace. XOM. Targets, watch for the retrace. This is getting a little crazy on XOM. Fang. Diamondback. Due for another retrace. And some setups for today. CENT. Not a big fan of the choppiness, but it's okay. Close above the 33, 34 area. Would get 36 on the upside. CNTA, the A series shares, same story. Different series. Guess we should turn on the statistics. Pretty juicy here, even though only that one has 27 trades in the history. 88 and 4.7. That's a really good one. This one, a little newer. IMKTA. Ingalls Markets. Here's the high, here's the low. Entry 80, 35, 26 trades, 61, 1.0. Not the strongest trender. This is well below, despite this being close to a statistical population, this is well below the 75% average. 75% average for trending stocks, for trend pullback continuation. So this one tends to fail a little more often than the average, and the profit factor is basically even. So the losses eat up the gains. I would be careful chasing that one. RRCC. Yeah, I don't like that sideways chop. UE. Also don't like the sideways chop here. It grabbed that little bitty bounce. Looking for a $20 upside target there. And WOR. Looking for a 59 upside target there. And yeah, Kramer said buy Netflix. Saw it on my Google feed, not even the X feed. I saw it on Google. It's funny. Yeah, that looks like 59 on the upside, but that's a downtrend, so I'd be careful there. 44.84, 1.2. That's, I mean, this does trend, so reasonable. 59 to be the target up there. 59.80. All right, let's go look at some gamma charts. Kind of make some predictions on what's about to happen today. See if we can read the tea leaves of the markets. Pushing into the 30-minute roadmap line. Pushing into the 1 hour, like all the roadmap lines are pretty flat, so not going to provide strong resistance and support for these indexes. SPY. Jump on down in here, see what we got cooking. Wow, look at that. Look how well we pinned on Friday. That was pretty darn close. That was my pin estimate, that line. This was the range I expected. We stayed right in there on Friday pretty well. Pull the silver to today. Let's see what we got cooking. Pull up the gamma charts. It's just reading the tea leaves of the, I use bullflow.io, links in the description if you want to jump on it. It's just a tool I use. I don't know the guys or anything like that. I found it on X. It's a freaking cool tool. I like the heat map. It's a different way to present gamma in the 3-dimensional space. Big level down here, February 6th. This Friday. Looks like the bubble is right here though. Down to 690, up to 700. No real big levels though on SPY. This is a cautionary. That makes me kind of pause just a little bit. Usually we see like $600-700 billion levels, but or $6 Yeah, 700 million, even billion-dollar levels, and we're not seeing any of that. The biggest level down here, 529 million out to Friday, and starting to get a 695. Let's look at the levels. Let's see. So common idea on where to pin is usually where the biggest level is, but I don't subscribe to that. I usually kind of balance the yellow with the purple. Purple is puts, yellow is calls, however you want to look at it. I usually kind of come in here and try to balance where can they screw the most number of people. Now, if you look out here, it's interesting on the map. There we go. Pull the map over to today. Got a big level of puts out here to the 20th. Big level of calls out here to today. Puts are kind of small, so waited a little more on the call side to screw more call players today. So today could push down in the 692, 691 area, since we have more call players going today. And that's kind of right where I had put this. So I'm going to put this right around, let's put it at 692. And then the heat map, back to the heat map. Upside 700, downside 690. So this is where I expect us to kind of stay today. Puts us on the lower end of that. So I expect price to kind of stay in here based on the options for SPY. Now, SPY is not the entire market. There's SPX, there's XSP, there's lots of other ways to play this. But based on the, my tool isn't able to pull all the rest of the tickers. So based on the SPY right now, that's kind of the game that I expect to get played. We may see this rally up to the top of the box and then come back down and settle in here by the end of the day. QQQ. That's the one I like to play with. Didn't get anywhere near the pin level, I thought, on Friday. This actually just kind of came down to the bottom of the box and hung out there the rest of the day. So today, let's see what we got. The levels are weak. And the thing is, with weak levels, the SPY levels may not hold. And we're seeing really weak levels on Qs. This is dangerous with these smaller levels. There's not much money playing in options, pushing in any particular direction. There may be lots of calls and lots of puts, but they're balanced out pretty well. So that means there's no real directional bias in the options. So the bubble right now, sitting here between 624 and 632. Tighten up just a little bit, 632 and 624. Man, that's not even like, we were playing out of the bottom of that thing earlier. And I guess there's a big level down at 620, so let's pull that down to 620. It's in the red. Here's a red zone bubble, right? It's only a 79 million. It's not very big on the grand scheme of things. The biggest level sitting there is 236 million a day. Look at the levels. The biggest level is actually out here the 20th. Look at that. It's kind of dwarfing today. Not a lot of QQQ players today. Based on this chart, Looking like we might go hang out at 629. Move the wrong thing. Awesome. 629. So that may be where the pin is today. We'll see. If it's got a pin. You know, it could do like Friday and just screw around at the bottom of the range. So this is kind of the expected range for QQQ today. Looks like we have some upward pressure based on where the options are set. But again, today's this, like, there's not much exposure today compared to the 20th. And this summation includes all the expirations, not just today. So look at this chart level. And we may come up here and hang out 629. Yeah, that's what I got. Yeah. I don't like the small levels though. This means there's not much strength to keeping anything from moving bigger. They could just let the rope go, and this, like, there's not a lot of put players that are gonna make money. There's not a lot of call players that are gonna make money if we go higher. Like this, it's really balanced. That lets the market move more freely. That's the caution here today, is that things aren't stacked very well to keep price from moving. So it could break out of these zones on QQQ and SPY. And that's a bigger range on SPY, so be careful out there today. Things can get out of control a little bit. That's what I got to say. I'll be on Market Masters at 11:30. Links in the description if you want to come hang out, see what I got to say with Jack. Probably be going over how to do the wheel strategy, all the 4 basic steps, and how it works, how we find tickers. And I'll be back again tomorrow. Same bat time, same bat channel, 9:15 tomorrow for Morning Monster. Have a great day. Be safe out there. The account